You think hitting 10 crores is impossible on a 50K salary, right? Though, so I'm going to prove you wrong today in less than 10 minutes, mathematically, right here in this explainer. Start the clock.
I know, 10 crore rupees, 10 lakh 000. Just looking at that massive number makes you sweat, right? It feels like this giant mountain that's only meant for CEOs or rich business owners. And I completely get your tension here. You look at your normal monthly salary slip and this number just feels crazy, like literally impossible. But stick with me, क्योंकि मैं आपको एक exact mutual fund strategy देने वाला हूँ आगे, जिससे ये impossible number actual reality बन सकता है.
See, this is the ultimate trap for a normal Indian professional. On one side, you have your regular 50K salary. And on the other side, this elite 10 crore financial independence goal. The gap between them feels like a huge ocean, doesn't it? But आज हम बस थोड़ी सी discipline use करके इस ocean के ऊपर एक rock solid mathematical bridge बनाएंगे.
और भैया हमें ये bridge बनाना ही पड़ेगा. Why? Because of a silent killer sitting right in your wallet, inflation. Just think about it. In 2002, a Honda City used to cost around 8 lakhs. Today, it's sitting at 18 lakhs. Things are literally getting twice as expensive. अगर आप अपना हार्ड अर्न्ड पैसा सिर्फ एक सेफ एफडी में रख रहे हो ना, तो टैक्सेस और इंडिया की इन्फ्लेशन के बाद यू आर एक्चुअली गेटिंग नेगेटिव रियल रिटर्न्स. यू आर लिटरली गेटिंग पुअरर सेफली.
Okay, let's stop talking abstract math and make this super relatable. Meet Rahul. He's a 30-year-old IT guy taking home 50,000 a month. उसका पूरा पैसा rent, EMIs और weekend के खर्चों में निकल जाता है. He looks at 10 crores and thinks, भाई ये अमीरों के शौक हैं, अपने बस की बात नहीं. I want you to imagine you are Rahul right now.
So, राहुल को एक्चुअली बिना काम किए लाइफ बिताने के लिए कितना पैसा चाहिए? Let's figure that out using a global standard called the Rule of 25. This is a simple mathematical formula. It basically states your retirement corpus needs to be exactly 25 times your annual expenses. It's based on the famous 4% safe withdrawal rate, meaning your money keeps growing in the background even while you're spending it.
So let's run the quick math on this. अगर राहुल का फ्यूचर इन्फ्लेशन एडजस्टेड लाइफस्टाइल साल का 34 lakhs का है, you just multiply that by 25. That gives us 8.5 crores. But wait a second. We live in India, and our medical inflation is running at a brutal 14%. Throw in a solid medical emergency buffer, and boom, Rahul's true target hits a solid 10 crores. I can hear your brain working right now. You're asking the obvious question. अगर मेरी salary ही 50K है, तो मैं 10 crores के लिए invest करूँगा कैसे? I mean, mathematically, you'd need to invest like 30,000 every single month, leaving you just 20,000 to survive. Impossible, right? Wrong. Listen to me as your older financial brother because I'm about to hand you the ultimate solution. Part 1. The secret weapon, the step-up SIP. Here's the absolute magic of a step-up SIP. You do not need to start with some massive, impossible amount. You just need to start smart. In year 1, start an SIP of just 10,000 rupees. That's 20% of your 50K salary. Very doable, right? Now, here's the trick. हर साल जब आपको अपनी कंपनी से 10% salary appraisal मिले, अपनी SIP को भी exactly 10% से बढ़ा दो. So in year 2, it becomes 11,000. Year 3, it's 12,100. That's it. Now take a deep breath. Are you ready for the magic result? After 30 years, assuming a realistic 12% expected return from your equity mutual funds, this simple, boring compounding formula generates a staggering 8.8 crores. No way, right? Just let that sink in for a second. 8.8 crores, starting with just a 10,000 rupee investment.
But hold on, our goal was 10 crores, right? कहाँ से आएगा बाकी का पैसा? It's simple. Over these 30 years, you and your employer are making mandatory contributions to your EPF, your Employee Provident Fund. You just take that saved 30 years of EPF compounding, add it to your 8.8 crore equity, and you will comfortably cross that 10 crore finish line.
Part 2. The portfolio playbook, the 3-bucket strategy. Okay, let's dive into this. Where exactly are you putting this money? You can't just throw it at random stocks and hope for the best. You need a proper execution plan. Enter the 3-bucket strategy. This perfectly balances safety, core wealth, and high growth. Bucket 1 is your safe debt. Bucket 2 is your Nifty 50 core wealth, taking up 60%. And Bucket 3, that's your mid and Flexi-Cap growth boost at 40%. Let's break this down. So Bucket 1 is all about safety. We're talking instruments like EPF and PPF. These give you a guaranteed, tax-free return of around 7 to 8%. Think of this as your ultimate safety net.
जब लाइफ में कोई इमरजेंसी आती है ना, this bucket protects you so you never have to panic and sell your stocks at a loss.
Next up is bucket 2, core wealth. This is where 60% of your equity allocation goes straight into Nifty 50 index funds. Why? Because it's low cost, it's passive, and it perfectly captures the reliable, long-term growth of India's top 50 companies. As India's economy grows, your money grows right along with it, without paying hefty fees to active fund managers.
Finally, bucket 3, the growth boost. Your remaining 40% equity goes into mid-cap and flexi-cap mutual funds. This is where we take a little bit of calculated risk to generate that extra alpha, those crucial extra percentage points needed to completely crush India's inflation. Par bhaiya, ek baat dhyan se suno. The math is perfect, but
Part 3, deadly traps. What will destroy your 10 crore dream?
Like I said, the math is foolproof, but human behavior? Not so much. As your older brother in finance, I have to warn you about the traps that will kill this dream. Trap number 1, lifestyle inflation. Society puts so much pressure on you to upgrade. You get a raise, and instead of stepping up your SIP, you go and buy a huge, flashy car on EMI. Let me be brutally honest, that EMI permanently destroys your step-up SIP capital. Buying things you don't actually need will erode your wealth compounding forever.
trap number 2, panic selling. Listen to me, the stock market will crash. It's a 100% inevitable reality of investing. पर इस डाउनटर्न में पैनिक सेल करके आप एक्चुअली अपने लॉसेस लॉक कर देते हो एंड यू कंप्लीटली डीरेल दिस इंटायर 30-year मैथमेटिकल प्लान. यू ruin your sequence of returns. Just trust the 3-bucket strategy, lean on your bucket 1 safety net, and let your equity compound in peace.
So what's the ultimate takeaway here? 10 crores is absolutely not just for the rich. With strict discipline and trusting the step-up SIP math, it is completely possible, even on a 50K starting salary. I want you to pause this explainer right now and tell me in the comments below. What is your current age and what is your exact target retirement age? Make that public commitment to yourself today. और सोचो, अगर आज start नहीं किया, तो 10 साल बाद inflation आपकी savings का क्या हाल करेगी? If you found this breakdown helpful, hit subscribe for more financial deep dives in our next explainer.